One of the best aspects of these symposiums, at least from my standpoint, is that I get an opportunity to talk and meet with so many of the individuals that I see on the street and make a quick hello and a quick wave, and then don't see them again for 3 or 4 months. That happens to be the case with Mickey. And it's actually, whether I want to give him credit or damn him, I'm not sure which, but it was Mickey who just came and called me and said, you need to do a symposium on uranium because uranium is about to take off. And when Mickey speaks, I listen. And I think when Mickey speaks, you'll listen. Everybody knows Mickey. Mickey has his own opinions. They don't always jive with what the company wants to hear, but 99 times out of 100, they're right on the mark. Mickey writes a newsletter called the Mercenary Geologist. I love the term. I didn't know a geologist could be mercenary. I just thought they went to the Colorado School of Mines and dug holes. But Mickey likes to make money out of the whole idea. He's been a analyst for 7 years, so he understands Wall Street, and a geologist for 35 years. And I think Mickey has a unique perspective on the product of, or the mineral which we're speaking about today, and I am looking forward to his remarks as much as you are. Mickey?
Thanks, Tom, for mostly kind words. Yeah, I am the mercenary geologist. You know, a mercenary is someone for hire, and I've always been for hire. If you pay me enough money, I've been pretty much willing to go anywhere in the world to practice not only the science of geology, but what I consider the art of geology. And it's really the art that separates geologists. Once again, I'm not a financial advisor, certified or otherwise, so nothing I can say here today can be construed to be a recommendation to buy or sell stock, long and short, anything, any commodity, etc. I'm operating to my computer, so bear with me here. Title of my talk, Why I Remain a Uranium Bull. And I do remain a uranium bull. Here's a 6-year rear view mirror of my involvement with the uranium business and my ideas on uranium. I first turned bullish on uranium in January of 2009. I am a contrarian, so I buy things when they are unknown, unloved, unwanted, and undervalued. I was way ahead of the game, something 18, 19 months ahead of the game. But that enabled me and my subscribers, which are the reason I do what I do, and those are mainly retail investors, to position ourselves in the uranium business for what I saw as a boom to come. Well, that boom did come. By November of 2010, I was being asked to speak at various symposiums and live business television on what I was calling uranium, the next big thing. And then we had a black swan event, the tsunami in Fukushima. And not only did uranium crash and uranium stocks immediately crashed, but this was the catalyst that caused the venture exchange to collapse. If you look at a chart of the venture exchange, its post-global economic crisis high was on February 28th of 2011, right before the day before PDAC started. Fukushima happened on March 11th, and it cratered the venture exchange. A lot of the problems that we see today with the juniors and their inability to raise money and their dilutive share structures with a couple of companies that are represented here that have not suffered those sorts of dilution, but that can be directly taken right back to Fukushima. Gold stocks, copper stocks, uranium stocks, whatever. And now we are, what, 4+ years later, and I'm going the wrong way here. And we are looking at a continuing bear market in equities. Let's look at the supply and demand fundamentals of uranium, and I will show you why uranium is still at $36 a pound. 2014 demand, 172 million pounds of uranium, mined 145 million pounds. We have continually increased our mine supply post-Fukushima year over year. I think that will change this year. I don't think we will see 145 million pounds of uranium mined this year. But the real key issue here is secondary supplies, and that's been 43 million pounds in 2014. So we've gone from, in 2010, a 39 million pound deficit, which explains why the price went from $40 in July of 2010 to $73 a pound in February of 2011. We've gone to a 16 million pound surplus. And that surplus, as alluded to, is not only due to mined uranium increasing, but increasingly secondary supplies. There has been an oversupply of conversion. In other words, U3O8 converted to uranium hexafluoride gas from which it is enriched. And enrichment supplies have increased significantly through underfeeding from uranium tails. And then we've got the Obama administration, and I will not be kind to the Obama administration, who continues to send a mixed signal on its uranium policy. U.S. government stockpiles last year and again this year will contribute 7 million pounds of U3O8 equivalent, and this year that is, a lot of that's going to come from uranium hexafluoride. But they continue to dump that on the market despite agreements with uranium producers of America not to upset the spot price. And we saw that with the sale in April of 3 million pounds, and the spot price immediately went from $39+, pushing 40, and back down to 35, now at about 37 pounds. U3O8 sales, hang on a minute, let me get my long-term contracts supply anywhere from 70 to 85% of the market on any given year. Short-term trades, that's spot price market, 15 to 30%. So the offtake contract price right now has been quite stable. It's at $49 a pound. Spot market price at about 37 a pound. And here's the annual spot uranium sales from UX Consulting. And you can see that increasingly over post-global economic crisis to 2012, the amount of UF6, uranium hexafluoride gas, has increasingly been a part of the spot price volumes. It looks like this year we're currently sitting at 15 million pounds. It looks like we're, almost halfway through the year, 5.5 months. It looks to me like spot sales are going to decrease significantly this year. Now, that tends to be a very seasonal thing, and we may see, we would not expect very much buying during the summer. It may kick up when the uranium conferences start again in September and October. We'll see. Tom Drolet probably has a better handle on that than I do. Here's, again from UX Consulting, the history of spot prices since January of 2012. And we saw spot prices go from about 50, 52, 53 bucks a pound, as low as $28 a pound last summer. Then a significant rise touched $44 a pound, I think, in one day in November, and you see that spike. Came back down 35, and then it ranged in the $39 range until these recent DOE sales. The term price has been much more stable over the last, since mid 2013, at $50 to $44, but been stable at 49. But no one can make money at those sorts of uranium prices. I should mention my sources generally on supply-demand fundamentals are UX Consulting. I've got to give them props because they give me their weekly newsletter for free when most people pay thousands of dollars for it, and then the World Nuclear Association. So those are two of the most reliable sources for supply-demand data. Unfortunately, the spot price drives the stock market. Despite being such a small percentage, the spot price is really what drives equities. A year ago, $28 a pound, now $37 a pound. That's a plus 30% bump in the spot price, but the equities have lagged behind. Sometimes the equities will lead the spot price, but in this case they haven't. So I can make a case now, as uranium equities have lagged the spot price, it may be a contrarian time to buy uranium equities. Here's 2014 uranium production. We've seen this before in talks. I think Tom had that talk today, but Kazakhstan at 41%. It has increased its uranium production year over year since 2004, something like that. Canada, Australia, and then everybody else. Notice the U.S. is now in 8th place. The last time I gave a uranium talk, we were in 7th place. We've fallen despite increases in production. So what will cause the spot price to increase? Well, it's simple. It's supply-demand fundamentals. We need more buyers than we have sellers. That's the nature of capitalism. One thing that has held back the spot price is the traders and speculators have left this market. A couple of big banks left the market last year. Chinese stockpiling continues. I expect that to increase once again. We saw last week that the Chinese Nuclear Corporation, CNCC, I think is the acronym for it, took a deal with Areva. So I think, are seeing the Chinese come back into the market. There's also been rumors that TEPCO, or perhaps it's more than rumors, TEPCO has sold uranium stockpiles in the market because of a lack of progress on Japanese restarts. You know, the Japanese are in a world of hurt. They're pumping out something on the order of losing $100 million a day on the burning of LNG versus uranium. So their economy is in a world of hurt. I think, you know, the idea, I think Tom said that eventually we might see about half of these 50 reactors, 20, did you mention 24? I think you're right on that, but in my opinion, the Japanese need to do something. Whether we see a restart in 2015, I'm hopeful, maybe 2 or 3, but I'm not convinced. The supply disruption, destruction, delays is of increasing concern. Look at the mines. Rossing hasn't made money for about the last 3 or 4 years. Ranger in Australia, and we're talking the world's largest mines. Ranger's Deep was put on the shelf last week or the week before. Paladin, shut down their mine in Malawi. You've got UEC, Uranium Energy Corp, essentially on hold because they can't make money at $35 uranium. We see Cigar Lake, and contrary to some opinions that I've heard today, I don't think Cigar Lake will ever produce 18 million pounds. If you look at Cameco's guidance, they were supposed to produce 5 or 6 million pounds last year. They produced for the first time 300,000 pounds. I was talking to Rick Mazer last night, and we agreed that essentially what they've got going right now with their 240,000 pounds of production last year, or annualized, is they've got a pilot plant going. They still have major technical problems there. It's if you guys know fission energy, and you know Ross McElroy, or Fission Uranium now, the president, he told me one time mining at Cigar Lake is like mining quicksand underwater, and that's what they're faced with. And personally, I don't think that mine will ever, those might be strong words, ever, but they have significant difficulties there. And then we have the Russian-Ukraine situation. If you remember that slide I put up on the world's largest production, those are once again 2 of the top 10 producers of uranium in the world. Who knows what the politics of that's going to be. So in my mind, the uranium story remains the same. We have nuclear energy still producing 13 to 14% of electricity worldwide. And we are continually electrifying the earth. Everybody in China and India wants what we have, the middle class, and that requires more electricity. USA, 1 of every 5 of us, every time we turn on the light, we're using nuclear power generated electricity. We have 437 nuclear power plants worldwide. We have 66 under construction. Chinese, as Peter mentioned, started a new one, commissioned a new one yesterday. There are 168 either on order or planned, and there's, 349, I think, now proposed. So this is an increased demand for yellow cake with a 4% growth projected year over year. And we've seen that 4% growth year over year for quite some time. That's not going to end. It's kind of like copper. You know, I give a talk on the supply-demand fundamentals of copper. You look at a copper curve from 1900, 3.5 to 4% annualized growth. Those things don't change. But number one, because there are 85 million more mouths to feed every year, and 85 million more people that demand electricity. You know, 25% of the world still goes to bed in the dark. That's changing rapidly, especially in the Asia-Pacific region. So where's the new production going to come from? Well, that's a tough nut to crack. Conventional underground those are high-cost mines that require $65 to $80 a pound. I don't care if you're in the Grants Mineral Belt where I live, or you're in Niger, or you're especially in the Athabasca Basin. You need $65 to $80 per pound to mine underground. So we need low-cost mines, and where does that come from? Well, ISR, 41% of production. That number is actually old. That's from 2013. I'm not sure what it was in 2014. So essentially, in situ recovery mining, which is what's done in Kazakhstan, it's what's done in Wyoming, it's what's done in South Texas. New Mexico is a good candidate for that. And open pit heap leach mines is where a lot of the new uranium has to come from, unless we get this $70, $80, probably $80 all-in costs for some of these underground mines. So we need a higher uranium price. Even the ISR mines, I don't care who you are and how you do it, you're breaking even at $35 uranium. Even the mines in Kazakhstan are breaking even at $35 uranium. But we've got to have uranium. Security of supply is the most important part of the uranium equation. And sometimes it doesn't matter to the Chinese what price they buy uranium at. They've got to feed their reactors. And at some point, we're going to realize that in the United States. So here's kind of a history of how I've seen uranium stocks perform over the last 10 years, from second half of 2005 to the first half of 2007. It was the boom. That was created a lot by speculators. So that $135 spike in the spot price of uranium, that was trading and speculation. And hedge funds and utilities did it, and speculators, your average Joe Schmo on the street, was buying paper uranium. In the second half of 2000, we saw the bust, and that went through the global economic crisis. And as I alluded to before, I started calling for a revival of uranium in January of 2009. That segment was flattened out of favor in 2010. Then it became the next big thing until Fukushima. What's the future? Well, I don't have a good time frame on when prices are going to go up. I just know they have to, because the world needs uranium. You can't turn off a nuclear reactor and start it up again very easily. So security of supply is paramount. We see sovereign stockpiles. Those are government stockpiling. They continue to dwindle, and I think Gus Simpson alluded to that. We see all these major projects shelved. We didn't mention the big Deriva project in Niger that was recently on the shelf. So you see these new developments continuing to be pulled back and put on hold, if not altogether canceled. We have Olympic Dam with an accident. We had Rossing with a leak. These are not major mine accidents, mill accidents. No one gets hurt. There's been no release of radiation, but that has continued this year to disrupt supply. The Russians, 2013 to 22, this replaces megatons, megawatts, but that's a 50% cut. So to commitment to the U.S. Uranium supplies, 50% cut from 24 million pounds during the megatons and megawatts to 12 million tons now. And once again, one of the solutions uranium industry is recycling and reprocessing. Americans were stupid enough to continue, in my opinion, to keep it, use fuel rods in swimming pools adjacent to reactors. That's a bit dangerous, as we saw. You need water. If you don't have a source of water, you're in trouble. We saw that at Fukushima. We see recycling and reprocessing continuing to increase. Russians do it, Japan does it, French do it to a big degree, UK does it, India's starting to do it. The bottom line, though, is we've got to have new mines come on stream. So let's look at the possibilities. And I'm not going to pick on any area specifically, but everywhere there are problems. Everywhere we look that new uranium supplies can come on, there are mitigating circumstances. There are no fatal flaws, but there's difficulty everywhere. Kazakhstan ISR. Is this production sustainable? It appears they have peaked. What they've done is they've gone to the north part of the country and the shallow deposits and picked all the low-hanging fruit. And what we see now is they're going to have to move to southern Kazakhstan, where the deposits are deeper, they are not as high grade, and they're harder to extract because this is ISR. The thing that Kazakhstanis, is that the way you say it, have an advantage is they can use sulfuric acid. No one else in the world can do that, can permit that. We used to do it in Wyoming, but no longer. Used to do it in New Mexico, but no longer. Yeah, so Athabasca Basin, absolutely the best uranium deposits in the world, high grade, underground, very high cost, with very long lead times. Niger, underground, world-class sandstone uranium deposits, no doubt. But I'm not comfortable with the geopolitical situation in Niger. You know, they've had a couple of coups. One of the coups since 2007 was due to corruption in the uranium mining industry. And you've got borders with Mali and Nigeria. There's been terrorism, accidents. There's been attacks, people killed at mine complexes. That doesn't say that we can't develop mines. We have to. But there are problems in Niger. Namibia, open pit, so low grade. Look at Rossing, the third largest uranium mine in the world. 400 ppm, conventionally mined open pit, conventionally processed. It's lost money last three to 4 years. We see Rio Tinto rethinking Rossing. And the water issue in Namibia. You know, Langer Heinrich is what, 200, 250 ppm? I don't know how Paladin can make money at Langer Heinrich. You've got to build desalination plants. This is the second most driest desert in the world, next to the Atacama of Chile. Western USA, we've got great deposits, great ISR, Wyoming, South Texas, et cetera. But these are small mines for the most part. ISR is small. You know, you don't see the kind of production that you could get out of a MacArthur River, or, you know, they end up being small, relatively sequential mines. Now, I didn't say there are not going to be a lot of them developed, because there are, and they're going to make money. Underground, we're looking at very long lead times of permitting. Roca Honda is absolutely one of the best deposits in the world. It's going to take a long time to permit. And Australian open pit mines, there are Aboriginal issues. ERA, which is mostly owned by Rio Tinto, just canceled Ranger Deep. And the politics. The government of Queensland once again put a moratorium on uranium mining. So that's a difficult situation. The point is, this is where, in my opinion, uranium is going to come from, and they all have difficulties of one sort or the other. If it was easy, we wouldn't be miners, I guess. Mining is not easy. The uncertainty of Western world supply is a big concern. It should be a concern for everybody that's an American. We have unfriendly, corrupt, and/or unstable governments in 6 of the top 10 producers of the world, 62% of 2014 production. Kazakhstan #1 at 41%. But look at the others. Niger, Russia. Do you trust Putin? I don't. I don't think the Russians trust Putin. Uzbekistan, Ukraine, China. None of those countries are friendly to the U.S. U.S. used 51 million pounds last year, used 1/3 of all the uranium used in the world. We produce 5 million pounds. Where is USA future production going to come from? Domestic is still going to continue to remain small. We're going to get most of our uranium from Canada, Australia, and unfortunately Kazakhstan, and Russia. Wyoming, South Texas, South Dakota, ISR, Arizona, Utah, Colorado, underground, high-grade underground mines. The Gas Hills, Sheep Mountain in Wyoming, those are open pit mines with heap leach technology. And then the biggie on the block, and will continue to be if we can ever get permitting times shortened in New Mexico, is the Grants Mineral Belt, underground and ISR perhaps, if we can permit it, and that's undetermined at this point. Let's look at some of these. This is Palangana at South Texas, Uranium Energy Corp. On hold right now because they can't make money at $35 uranium. Yeah, so this is the satellite facility at at Hobson. Uh-oh. Lance Project, which we've already heard about, seems like a wonderful deal. Gus didn't mention, but they'll have a New York Stock Exchange market listing pretty soon. Interesting company. Here's the White Mesa Mill, 8 million pounds of capacity. This is Energy Fuels, which just merged with Uraners on Thursday. That company's market cap has increased 250% in the last 3 days. If you're a subscriber, we picked that 3 weeks ago and you would have made a bundle of money already. Pine Nut, Arizona. These Arizona breccia pipes, the second best uranium deposits in the world in terms of grade. They unfortunately tend to be pretty small. Nichols Ranch, this is the Uraners portion of the new EFR. This is a startup. As with all startup ISR productions, they will have a few fits and starts in getting this up and running, but you know, 8 million pounds at the White Mesa Mill, and they're running about 1 million pounds through it on an annualized basis. Here's an interesting one, Gas Hills, Wyoming. This is a uranium roll front, right there. 10 meters below the surface, never mind. This, once again, is owned by Energy Fuels through the Strathmore acquisition. And then the biggie is Roca Honda, combined with Mount Taylor Mine, probably 150 million pounds of 0.5% uranium. But once again, we've got permitting issues. We don't know when this will be permitted. It needs $75 a pound uranium. So in closing, why do I remain to uranium bull? Supply-demand fundamentals, 20-30% yearly mine supply deficit, 66 reactors under construction, 172 ordered, 312 proposed. And once again, it's this contrarian speculating investing philosophy that I have. I think this is the time that you would like to position yourself in uranium stocks. I think we heard 4 good stories today. But once again, when you're speculating in these stocks, you have to be aware of all the frogs masquerading as princes. Thank you very much.